Hello, everyone. Welcome to episode good number 90 of Going Live with Good Soil. I can't believe 90 episodes in. That's a long run here, Matt. We're doing this the last 40 or so episodes on Twitter Spaces and our YouTube Good Soil Investment channel at the same time, live streamed. Seems to work out pretty well and smoothly. I'm still surprised that not more YouTubers are doing this. I think they'd get more exposure if they were doing their live streams on Twitter Spaces at the same time when they can, because oftentimes the YouTubers is just like one person and like another person, and it would be easy for them to do the Twitter Spaces set up at the same time, I would think, right? What do you think about that, Matt? Why do you think not many YouTubers are engaging in this?
Well, I think a lot of YouTube channels, we don't do this, but a lot of them try to monetize their content, and so Twitter doesn't really let you monetize
That's
that, at
true.
least yet. I know Elon's working on that, but I
That's
think if
true.
if that's your goal is to make some money on by providing your content, then it's probably just natural that you prioritize YouTube over everything else.
Yeah.
But
Yeah.
I don't know.
I
I
guess
mean, it's
so.
also a little complicated. Like you've got to do the Bluetooth, and you need two different devices. It's kind of a pain, but it's really
Yeah.
not that bad once you get used to it.
Yeah. Yeah. I mean, if you're already doing YouTube on your computer, all you need is your cell phone. It's not too hard. Yeah. It's just, you just need to add your cell phone into the mix with AirPods or something. It's easy. So anyway, let's move on. Now we got enough people joined on Spaces and our YouTube Live. Normal format as usual. We talk macro markets, anything important in the macro economy or Fed, and then we go into Tesla and Twitter, Elon stuff, and then anything notable and the other stocks we follow, we'll touch base on as well. Rocket Lab, Lemonade, and Roblox, and then we'll do Q&A from the audience. So start off with macro stuff.
Yeah. Hey,
You know,
quick PSA before we get
sure.
into that, if you don't mind. Just for anyone listening on Spaces, we are going to be doing a preview of the Tesla earnings model for Q1. So if you want to see the numbers, you might want to switch over to YouTube
Yeah.
just for that. But we'll do our
But we'll
best to
talk
kind
it
of
through.
talk through
We'll
it as
talk through
well.
the key numbers. Yeah, we'll talk through the key numbers if you don't have access to do that at the moment. So that'll be in about 15 minutes probably. So the macro market. I mean, the Fed against my guess. I thought the Fed was not going to raise rates, and they did raise rates 25 basis points. So that is definitely not ideal, right? I mean, they I think the market is sort of what they expected it to do, the market, but I think for the economy at large, you're just putting more clamps on all these held to maturity books of assets that are going to have to take markdown losses. There's rumors of a credit default swap not rumors. There was credit default swaps trading at much higher for Schwab, meaning that Schwab had disclosed some major P&L losses on marking their held to maturity assets last week in a filing, and so there's questionable whether they have a negative tangible equity now, and they're going to need to be bailed out. Even Schwab banking, of all places people thought were safe, so it might just be more and more of these types of banks are going to be in big trouble if rates continue to rise or don't come back down soon. Any thoughts about
Yeah.
this, Matt?
Yeah, so we were talking about this. I can't remember if it was last week or the week before, but about how the banks have this accounting treatment for treasury securities where they essentially don't mark them to market the way they're required to for several other securities. And
Hmm.
the reason for that, if you're an accountant, would be, well, if you just hold them to maturity, then you don't need to ride out all the volatility because you're just you will be made whole in the end. And like that's technically true, but it obfuscates a lot of the risk that is underlying these. So I saw a stat somewhere recently that the banks are sitting collectively on about $1.5 trillion of unrealized mark-to-market losses.
Yeah.
So like everything's fine, as long as you don't have more runs, and the banks can just hold these to maturity. But if they can't hold to maturity, and frankly, I don't think they will be able to, because if you're just a normal consumer and you've got, say, $10,000 or more sitting in a bank account, why would you have it sitting there earning 0.1% interest when you can stick it in a treasury security and get 5% on it? So I think the monetary policy is forcing the situation, which is going to accelerate. I think the rotation of liquid assets out of banks' balance sheets, which is going to force them to sell these things at losses. So it's just a bad situation. I think the downside risk of the Fed really just like not only increasing the insecurity in the banking sector, but really increasing the risk of a very severe economic recession. It's raising, every month where they go and kind of continue the same set of policies. It increases the probability of a very bad outcome, I think.
Yeah, I know. And they're I mean, do you think there's going to be more banks in the next couple of weeks that are going to have to, do you suspect, what's your odds on like us hearing more headlines of more banks, needing support from the Fed and to be bailed out in some way, shape, or form, just to assure depositors that they'll be guaranteed their deposits and such?
Yeah, I don't know. I mean, it's hard to say. We don't have a whole lot of visibility into their, detailed balance sheet holdings. So, I'm not sure which ones are necessarily at risk. And
Yeah, me neither.
I think to the government's credit that they've done a lot to kind of shore up the short-term liquidity issues. But I think the guys on the All In podcast last week summarized it really well. That if you're not going to overtly guarantee all these deposits, then you're going to have this situation where there's going to be like people splitting up into a lot of different banks to maximize their FDIC coverage. And so you're going to have this kind of rotation in between the different banks, and probably this sector rotation like I was talking about, where you're getting cash out of the bank deposits and into treasuries. And all of that's going to increase the fragility of the banking system. So this seems to be the sort of thing that happened really fast. I mean, given how quickly they went from a AAA rating, I think from Moody's and S&P, Silicon Valley Bank did, to like
Mhm.
essentially liquidated.
Yeah.
It's hard to tell. I mean, I don't have a good read, but it's definitely in a fragile spot right now, the entire banking sector. So
Yeah.
um,
Yeah,
yeah, go
there
ahead.
was I mean, we won't rehash the Powell press conference and how at the same time Yellen apparently was speaking and saying conflicting things. Like Powell was saying, "Yeah, of course we'll assure depositor we'd likely do that," and Yellen at the same time is basically saying, we're not going to assure guarantee depositors," and the market kind of like nosedived a couple percent or two at that moment, apparently. So it's just conflicting messaging coming from the Fed and Yellen, and there's conflicts of interest with Yellen. And we listened to there was so much good content this weekend to listen to. It was hard to catch
Yeah,
up to it all.
yeah, there was.
All In podcast is a must listen to if you don't listen to. But then Kathy Wood and her In the Know, she had a special guest, Art Laffer, legendary macroeconomist. And they were talking about all of this stuff as well. And then
And
there's
Sam
other
Altman on Lex
Sam
Friedman,
Altman,
which
Lex
I don't know
Friedman
if we'll
was
have time to talk about that, but that was a fantastic interview.
yeah, that was
It's
good.
pretty eye opening.
Yeah, but the Kathy Wood Art Laffer interview, they talk about the conflicts of interest that, you can't trust Yellen because she's on the Biden administration payroll now. So like you just can't trust anyone on the payroll of a political administration because they're inherently going to have biases, and that makes total sense. Like you
Yeah,
can trust to some degree Powell that he's some sort of that you hope that he is independent thinker, and not necessarily biased. But Yellen, you can't really trust. And they made a lot of good points in that interview, in that discussion. And they talked about crypto at the end. And so if you haven't listened to that, it's definitely a good listen. Do you have any interesting takeaways from that, though, other than the fact that we just really can't trust Yellen?
yeah. I mean, that was a really great point, because I did watch some of the Yellen testimony, particularly the part where one of the senators, I forget which one, was grilling her on, well, hey, do you think deficit spending like adds to inflationary pressure? And she's like, well, no, I don't think it does. And I'm like obviously, like I bet, like
Yeah.
if you had her like after a drink, like off the record, of course she would say, well, of course, like, yeah, deficit spending absolutely
Yeah.
increases inflationary pressure. But like to your point, and to Art's point in that interview, she's an agent of the administration, so she doesn't want to say something like, well, yeah, like listen, like the president and our legislation keep pushing these absurd government spending packages that are accumulating this deficit over time, which makes the interest payment unsustainable, and which is increasing inflationary pressures.
Hmm.
So like just hearing someone like Art Laffer, who doesn't have these conflicts of interest, say, well, yeah, it's unhealthy to have these levels um, of like struggling for words here. Sorry for a second, but just
Yeah.
to have these levels of deficit year after year after year, it's obviously unhealthy. But like nobody in Washington will say so.
Yeah. And the second half of their discussion was more about like crypto and Bitcoin and such. And Laffer made a lot of sense towards the end when he was talking about like, let's not call it crypto because that just is weird branding. It makes me think of like secret messages during World War II or something. Like crypto is supposed to be transparent. Let's call it just Bitcoin or something. And Kathy's like, well, why don't we just call it digital assets? And he's like, that's fine too, but just don't use the word crypto. And it made sense to me. Like too many people refer to it as crypto. The space is crypto, and that does have like a semantics negative uh slant on it big time. Like what
Mhm.
honest people want to be involved with something like the word crypto? That sounds very like illegitimate, like secretive, like I'm not going to get caught, kind of like hiding, that all
Yeah,
synonymous. And like that is the worst branding word I can think of if you're trying to get it to be more mainstream. So
yeah.
that was such an obvious point that he brought about that it makes so much sense. How come there's not more of a conscious effort to not use the word crypto for all of this? Because it taints the whole space so much.
Yeah, that's a great point. I mean, I think it's just one of those legacy, words, because it's comes from the cryptography, which is the really advanced math essentially that they use to
Yeah.
secure the system, which is a core
Yeah.
piece of it and super important for blockchains. But,
Yeah.
but you're right, it's terrible PR
Yeah.
in
I
a space which
see.
really needs good PR right now.
Yehovy in the comments says kryptonite. Yeah, it's kryptonite to the fiat system for sure. But kryptonite has a negative connotation to it's like an evil, like power sort of for Superman. And then there's like I don't know if you ever listened to the show, not watch the show when you're younger. Tales from the Crypt. Did you ever see that
Yeah, yeah,
show?
yeah.
Yeah, I mean all anything with the word crypt in it to me is like a negative connotation, like death, crime, scariness, and like it's just not a good word for a new monetization system you want to take over. It's just like
Yeah.
I don't know. We gotta change that. Maybe we can make a concerted effort as a community to try to like just call it Bitcoin. That's fine with me. Because that's the
Yeah.
main thing right now, the digital gold, and you can call the whole space digital assets or whatever you want. I guess I don't know, but just not crypto. That's just that's what stuck
So
out to me.
what's your thought? We haven't really spoken about this, and it wasn't on our agenda, but there's been this kind of increasing push to central bank digital currencies. What's your take on that?
Central bank digital. I think,
CBDCs, which are
yeah. Imagine if they tried to brand it central bank cryptocurrency. That would be like such an oxymoron. So, central bank digital currencies. I mean, I think the wheels are in motion to move in that direction. I just don't know if it'll be successful or not. How late it is to the party. I just don't know how adoptable it'll actually be in reality. I feel like it's like they're forcing um a round peg into a square hole or something. I feel
yeah.
like, it's sort of like Obamacare insurance or something like, oh, the insurance is going to solve everything. Obamacare, Obama's insurance. And I don't know one person in real life that has signed up for that successfully or used it. I'm sure there are some people out there, but it's not nothing compared to what like was promised about it. So I just feel like it's this great bold idea they're trying to move forward with, and the government agencies are trying to move forward with, but the government can't do anything right. Like that's another problem with it used to be working for the government was like a prestigious job like 100 years ago. I feel like doing things for the FBI or whatever. Now like it's like retards work for the government. Like if you can't get a job in the private I mean, I hate to be so negative, but like if you can't get a job as a technology worker in the private sector, then you default in the technology work. Like if you're like a programmer or a coder, like you're not going to work at the government unless you're too you're and it's most likely you're too not going to cut it at the private sector, like, so it's like the B and C team doing stuff at I just don't have any confidence in the government. The government should pay more for technology workers. If they could pay up and like make it like a prestigious thing to do, that would be awesome. That's what they need to do. That's another rant, but we'll save for another day.
Yeah, you got some very strong opinions on that.
I do.
Yeah,
I do. Yeah. Yeah. So anyway, that's what I think. What are we on now? Anything else with the crypto or the Bitcoin
No,
digital
I
assets
mean, yeah,
discussion part, or Kathy?
there's I do think there's a broader conversation here just about the kind of government's seems to be kind of attacking crypto on several fronts right now. I mean, there was the Wells notice that was served to Coinbase, which I could do a whole rant on that just because like Coinbase has been begging for regulation for years. Um, and the SEC has essentially like refused to offer any guidance on what's a security versus what's a commodity. So like Coinbase, which very transparently tries to be like the source for like US compliant crypto, or not crypto, digital
Yeah.
assets. They
Yeah.
try very much to like make this a very legitimate industry and follow all the rules and do all like the required reporting, but they've been in this like regulatory gray area, and they've tried to go to the SEC for like to give guidance on what sort of rules do they need to follow. And Gensler has just been awful. Like just he like cozied up to Sam Bankman-Fried, was about to give
Yeah.
FTX this like
Shady.
really
Yeah.
great treatment, and like to the detriment of the rest of the industry.
A
And
lot of it is through the
now,
connections of Sam Bankman-Fried's parents, who are both like Stanford
yeah,
professors or something, and have all these connections to the government. It's crazy. Anyway, go on.
yeah. So it's just, there's personal reasons to think that, Gensler is not on the up and up with this. But just the whole thing, like if you're actually following the details of the way this has unfolded over the last several years, it's just really shady the way that they're trying to do it. And legitimate players are like forced to go through the legal system and being served Wells notices, which means they're going to be sued by the SEC. So like the stock dropped, what was it, 12% that day or something when that news came out. So it's just like the government is not only like being incompetent, but actively getting in the way. And there were allegations that that's why Signature Bank was kind of folded and potentially unnecessarily, because that was kind of an on ramp for a lot of digital asset investors. So it's just the whole thing is it's just kind of gross, and I'm just losing faith in government more and more each year
Yeah.
it seems.
Yeah. It seems brutal. I mean, this election cycle can't come soon enough, I feel like. I mean, you just need some of these issues out in the open for, the politicians to have to, follow their constituents, follow their supporters' opinions on some of these things, I think, to get it in discussion more. So what's next on the topic here? The crypto crackdown is they did talk on the discuss. Kathy is convinced that this is going to be an election issue for this election cycle coming up. Is the legitimacy of Bitcoin and the government intervention and trying to like crack down on it. Wrongly in some cases, like with this Wells notice to Coinbase and such. And so I think if Bitcoin creeps into the discussion for this election cycle, which hopefully I think it should, but it depends. Like, hopefully it should during some of these town hall. Like, don't the presidential candidates all do like town halls? But how scripted is it? Like, aren't the questions all pre-vetted? I mean, I feel like you need like a real town hall where the questions are not scripted ahead of time or pre-vetted, and people can ask what they want without having to go through some vetting process. Because then you'll have people asking like, "What do you think about Bitcoin? Should the government allow it or whatever?" But like, they might just screen all those questions out or something and make it hard to bring it up in the discussion. And hopefully that's not the case, and it comes up in the discussion at some point in this next election cycle. Because if it does become like a talking point of some sort in debates amongst the town hall discussions that these presidential candidates are going to have to do, I think that you'll get a lot more attention to Bitcoin. I could see Bitcoin going up really fast and becoming very volatile. Like, I could see it going up to 100,000 again, to be honest. I could see it going to 50 to 100,000 and bounce around and be volatile during the election cycle if it becomes a big discussion point within this next, group of candidates. What do you think about that, man? Do you think it's possible, or do you think it's
So
likely?
So I actually disagreed with Art and Kathy on that point. I don't think it's going to be a big election issue.
Mhm.
I mean, crypto certainly among the younger
I mean,
generation
Bitcoin.
is Bitcoin. Sorry,
Yeah,
Bitcoin
we
and
got to
Ethereum,
correct
digital
ourselves. I
assets.
say too. Yeah.
Um, it is more popular there, but still the adoption rates are, I think they're in like the single digits or something like that. I don't know the latest on the adoption rates, but
There's probably a
for the
lot of
most
lack of
part,
self-reporting, I would imagine. There's probably
yeah,
a lot of people who don't. Yeah,
there's probably a fair amount of that. But I think, Martin Muldoon in the comments says the average American doesn't understand that and understand it. And I think
true.
that's true. And if you look at the last year, you've got Do Kwon and the whole Luna collapse, and he was just arrested this past week. You had
Yeah,
FTX and Sam Bankman-Fried, obviously. You had,
yeah.
the
Tons of
that
fraud.
hedge fund, just absurd amounts of like fraud, and even the stuff that wasn't fraud, there was just a lot of like, altcoin like crap that
Binance just had a big
went
lawsuit
down.
against them.
Yeah,
Yeah.
that's right. Yeah, CZ from Binance, and like they're doing some shady things. They're not even supposed to have US customers, but they're essentially just like letting them on anyways.
I mean,
So
it's
like,
shady for that guy to not even let people call, like, to be branded as just the letters CZ. It sounds like some like digital gang, like
I think it's just
illegitimacy.
his name is like
I don't know. He
Chung
should just,
Zhao or something like
well,
that.
just
It's just
call him by his name. I don't know. I would never like. Imagine if there's a politician running and be like, "Hey, I'm CZ running for president." You know what I mean? Like that would not fly. If you want to be
I
legitimate, you can't have initials as your name. I mean, he sort of partly brought it upon himself, in my opinion. Just like crypto should not be called crypto, should be called Bitcoin. The guy CZ thinking he's so big, he could just call me CZ, man. Like I feel like
I
that's
don't
just like you're
I
being
don't
upon
think it's that.
yourself.
I don't know. I think that's just like talking to enough Chinese people as I have, since I studied the language for so long. It's just Americans really have a hard time pronouncing those names, and so I think it's just
Yeah.
that simple. Like a lot of them, like Jack Ma, like Jack is obviously not a Chinese name, right? So a lot of them
Yeah,
will
but
just
that's
do like
two
some
name. That's like a name.
American.
That's okay. That's
I don't
okay.
know. I don't read anything bad into that particular thing, but
Okay. Okay. I'm
it,
overreacting. Okay.
overall though, it's like there's so much bad to point to with crypto that I kind of doubt that the overwhelming sentiment on that issue will be like a positive. And hey, look at like what the government is doing, like cracking down on these great decentralized platforms that are doing things the right way. Most people don't have that level of nuance to kind of distinguish between the FTXs and Sam Bankman-Frieds of the world versus
Yeah.
Bitcoin and Ethereum, and it's like a lot of the decentralized stuff, or the Coinbases, which are doing things on the up and up. So I don't
Yeah.
know. I think it's going to be, and like to get to your town hall point, you get AOC or whoever up on like they're going to take the easy soundbite and say, I'm going to protect Americans by
Yeah.
like making sure the next Sam
Yeah.
Bankman-Fried doesn't like.
Yeah.
That's such an easier message than look at what
Yeah.
Gary Gensler is doing, and it's like a little crooked, and like
Yeah.
it's too nuanced, I think, to really.
Gray area.
I
Yeah.
could be wrong, but that's my take. Is
Yeah.
it's not
No, I
necessarily going to be a big
make
item.
good points. Good points. I see Elijah in the comments. All right, let's get back to basics. Are we buying calls or what? We're going to talk about Tesla in a second. Yes, let's move on to Tesla. But one thing we noted yesterday when we were talking is that the December 2025 calls for Tesla just came out. That's almost 3 years. That's pretty crazy when you think about it, because it's the end of March. So it's the end of December. That's 3 months. That's 2 years and 9 months. Is
Nine
that right?
months, yeah.
That's a
Yep.
lot of time to wait for Tesla. So I mean,
But
that's a good thing. That's a good thing in
yeah,
time, like having time on your side, because who knows how long this macro bear market interest rate fluctuation is going to happen, which is, ridiculous already. Like that the Fed is still jawboning, keeping rates high, and we all know they're going to lower rates later this year for recession. Recession's going to, it's like the
yeah.
futures are pricing it in. It's going to be like, I think the Fed futures 50-50 line last I saw was like 3.5% by the end of this year or something, that they're going to lower it to that point, something like that. So
Yeah.
even though they're saying we're going to keep rates high for a long time, if you're a betting man, the odds makers, the market makers, the markets are the 50-50 over under is 3.5% end of this year, something like that. So we'll see what happens, I guess. But
Yeah,
yeah, yeah,
on the 2025 thought too. I mean, you make a good point for the kind of macro market turning around at some point, but think about it just from the Tesla perspective as well. And we don't have a position in these, to be honest. I mean, obviously we're long Tesla via stock and call, so not investment advice, but just thinking of the next 2 years and 9 months, what's going to happen. Obviously, you're going to have Cybertruck by then. You're going to have the Giga Mexico plant and the Gen 3 platform actually producing and selling by that time. I mean, you've got
yeah,
Tesla Energy ramping pretty significantly during that time. And look at all
yeah,
the improvements in AI in the last like 2 years. Tesla
Yeah.
obviously has been really slow on like the improvements in FSD, but like I think it's a huge mistake to look at how slow the developments over the last 3 years have been, and then extrapolate forward on that. I mean, this
Yeah.
V11 was a huge, like gargantuan undertaking, and I don't think they have another one of those like massive structural like software stack upgrades in the next 3 years. I think a lot of what they're going to be doing is just like optimizing and like fine tuning the the parameter weightings and everything like that to really make the software a lot better. So thinking on if it's drastically better 12 months from now, what does that do to take rates, and what does that do to the financials, and like does autonomy happen in the next 2 years and 9 months? I think like there's a good chance that could happen. So
Yeah. Yeah.
I don't know. It's like the macro looks really opportunistic. I think if you go out almost 3 years, and Tesla's fundamentals too, it's just there's so much to be excited about.
There is a lot. Yeah. I mean, the ramps of the Berlin and Austin. The only concern I have, I would say, the only potential risk I see really for Tesla, not only the macro market, interest rates staying high for longer, and, the market's got, gonna just slowly dissipate. Valuations are going to slowly get worse and worse, and because of interest rates are going to be 5%, 6% for a long time or something. The only thing I'd say is right now, what's priced into Tesla stock at these current interest rate discount present value valuations is a lot of growth, right? And so we're witnessing the growth. I think that's sort of priced in, and that's why the stock isn't like ramping up so fast, even though we're going to have a record quarter deliveries probably in Q1. Because to warrant this, six or $700 billion valuation we're at now, like you really need to show this type of growth, to continue. And
Yeah.
the Model 3 and Model Y, like how do we know that if they're close or not to their saturation point? I mean, Model Y
Yeah.
is the best selling car in the world, right? It will be this year. But does
Mhm.
that mean it can be double the best selling car the 2 years later? I don't think so. I don't know. I mean, I think there's a limited saturation capacity for a $50,000 car, which essentially the Model Y is when you have some options. It's probably averages around 50,000. I'm guessing something like that, 45 maybe with rebates or something. So that's the only bearish point I would say is like the Model Y might max out at like 3 million units globally a year, let's say, and the Model
Yeah.
3, let's say, is 500,000 units a year because it's just a sedan and it's not as popular, or like 2.5 and 500. Maybe that all maxes out at 3 million. And you see that max out, you see the factories, you have to kind of wait for that Gen 3 platform then. And maybe the Gen 3 platform, even though we're all excited, the Mexico plant's going to be built in record time, these things get delayed. Maybe the Mexico plant is 2 years before it produces the first car. Then there's like a slow ramp. And, by that time, the stock might not have not appreciated yet, if everything takes a little bit longer than expected to play out. That's all I'm saying. Because when the Gen 3 platform is, I'm confident that when it does ramp up, that there will be a new valuation model on Tesla for building 10 million cars a year, being more widely accepted, and selling. Right now, I think too many people are skeptical that Tesla will ever get to 10 million cars a year. That's what I think. So we'll see.
Yeah. Yeah, but I mean, like, so even if the Model Y and everything else is at 3, I think just thinking of how much bigger the demand for the Gen 3 platform would be, I think it should be at least double that. So call it 6. So then you get to
Yeah.
9 just on
Then you
those
get to the
two, and
10,
maybe a
basically.
million from Cybertrucks. So then you get to 10, but that's basically like what Wall Street and I mean the Gary Blacks of the world are even thinking. So
Yeah.
to me, it's if Musk is right, and maybe I don't think the 20 million is probable, to be honest with you, by 2030. But if it's 15, that would definitely be like a net gain to the stock. But I think the more important thing from a valuation standpoint, I think, is going to be what do those margins look like,
Yeah.
because the potential of autonomy and just like full self-driving to really drastically change the financial profile of the company. A lot of people talk about how that's already priced in, but it is not priced in. I don't think at all. So that's
Mhm.
that's a huge upside that still remains there, I think.
Yeah. Yeah. What's not priced in yet? The compact car capacity, you mean? Or
Well, like the improved margin potential from
oh,
autonomy. So like
oh yeah, yeah,
if
yeah, yeah, yeah.
FSD take
Higher
rate,
adoption rates and stuff.
yeah,
Yeah. Hmm.
it's so low right now. I mean, I think in our we'll go through the model in a
Yeah.
second, but I think I'm assuming a 6% take rate on FSD.
Yeah.
So it's just so small. But
Yeah.
if they get to 15, 20, 25%, I mean,
Yeah.
that's a lot of extra billions of dollars of margin that they're going to have.
Yeah, I see. Yeah, and T Nelly in the comments says Tesla needs to focus on concrete tangibles, get Cybertruck out ASAP, and full focus on solving the 4680 dry battery electrode. Yeah, I agree. Those things need to be that's like the hard tech proof showing like, hey, we're manufacturing experts or the leaders in the world. Look, we built this amazing Cybertruck. We're doing batteries like no one's ever done them. I think that just furthers the case for for such a high valuation even amongst the bears like Drew Dixon.
Yeah.
And so I'm just thinking from his point of view and people like him who aren't necessarily like shorting Tesla, but they're just bear and skeptics. And I think the majority of institutional Wall Street is kind of not know doesn't understand Tesla enough to really, and they're kind of just stay cautious about the valuation, thinking it's rich and maybe it's not, it's not worth investing in yet. And I think if you can get those people on board by showing them, like you said, the improved margins with the adoption rate of full self-driving picking up, and battery production, doubling year over year for Tesla because they solved the DBE, equation for that, and the Cybertruck ramp go fast. If you can show that type of stuff, I think the stock could be in for a nice upside surprise. And that's all very possible in the next 1 or 2 years. And so anyway, let's go on. We've talked a lot about this long-term 3-year out call option timeline. So the model, this is the big feature event for today. We're going to preview the model. We're going to estimate that we sort of said in our prep call that we were going to maybe say a bullish realistic guess is 445. Maybe we can change it to 440. I'm thinking, what do you think? That seems to be like a more bullish / realistic guess to
Yeah.
me. Do you think we could do that in the model?
So we can do that, and I'll pull the model up here in a second for everyone. But just to give some background, Emmett and I were just kind of looking through the production and delivery figures, and one of the big surprises, I think, at least to you and I, was that the Giga Berlin plant was
Yeah.
had reached 5,000 a week already, when they had just reached 3,000 in late December. So that
Yeah.
those two data points give a pretty good idea that the average output over the course of the quarter is 4,000 a week. And so when you do that math, I think it was either 10 or 15,000 units higher than Troy's production figures just for that one plant. And then on top of that, Shanghai's looked relatively strong. The European inventory levels continue to go down. And so there's just a lot of signs pointing towards the kind of 420, 425 figures that we were looking at seem really low now that we're kind of seeing this end of quarter push. So I'll share the model now, and we can kind of talk through these different scenarios. We'll start with the base case here, and then we can kind of do a sensitivity after we walk through this. All right, so can
Yeah.
you see the screen there?
I see it. And we'll talk through the key numbers for people listening on Twitter Spaces. Yep.
Yep.
Go on.
And just a quick note, as we're going through this model. So the last 2 quarters, with Berlin and Austin ramping up, we had this more detailed model that we had walked through in detail that kind of did the cost by plant and everything like that.
Yeah.
But we also had the biggest misses by far in the history going back to 2019, since I've been doing these quarterly estimates. The updated model, which we were thinking would be a little bit more granular and a little more accurate, seemed to kind of result in a upward bias. So we missed high on earnings and margin by a pretty significant amount. So went back to basics, used this more simplified model that I've been using since 2019. So hopefully that gets us a little more accuracy than we've had for the past 2 quarters. But at a high level, we're starting with pricing, and I've assumed essentially a 7% price cut. So per Zach's comments, the kind of list price decrease that we saw Q4 to Q1 is not going to be realized. It's kind of the ASPs in Q4 were a lot lower than the list prices were indicating. And that means that the realized ASP in Q1 is not going to go down the full, 10, 15%. So we're assuming 7% decrease in ASP here.
So from 50,700 to 47,200. So like a
Yeah, for the
$3,500 decrease. Okay.
for the
And
the
the
three and the Y,
average
and it
price
gets blended
for
between
3 and Y. Yep.
the S and the X and everything like that. And there's the semi,
Yeah.
which is like hardly anything, but I'm including it here because it'll scale up eventually.
Hmm.
So then FSD,
We're
acceleration
skipping over
boost,
the
a couple of the
semi
other
because
things.
it's still de minimis. We think semi. We're skipping over that. Yep. Go on. Yeah.
Yep. So this gets to total deliveries of 435,000 in this kind of base case, which is maybe a bit on the high side. So maybe I don't know, do you want to move the base case down to 430, or do you want to leave it at 435?
Well, we're gonna do. I thought we are gonna do 440.
Well, I think that was for the upside case,
Oh,
right?
okay. So the base case, yeah, 430. So we're gonna go over a couple cases here. Okay. All
All
right. I
right.
misunderstood.
So
So
let's bring the base
430.
case down to 430.
Yep.
So then I won't go through all these details. It's just some small kind of software type upgrades here. I'm assuming a 6% FSD take rate, which is consistent with what I calculated for Q4. So
Hmm.
really low, doesn't have a huge impact here. And then I'm assuming that there is no increase in deferred revenue, full self-driving deferred revenue recognition. And I don't think some people were saying because V11 chip, that'll be a recognition of revenue, but there's no increase in capability as far as I can tell. It's just they changed the way that they're doing driving on city streets and on the highway. But to me, there's no rationale for recognizing incremental revenue. So I've not assumed anything there. The credits I have increasing to 500 million. Now this is the ZEV and kind of traditional auto credits, but you also are starting to get the IRA credits. The biggest
Mm.
component of that's going to be the roughly $45 per kilowatt hour that they get on all of their 4680 cells. But they're also going to get some additional credits for packs that they assemble. That's around $10 a kilowatt hour. Zach Kirkhorn gave some guidance around this that it's going to be, I think he said, I forget the exact number, but like 200 to $300 million per quarter, something like that, but increasing over the life
Mhm.
of or over the course of 2023. So when you combine that figure with the kind of historic level of roughly 300 million or so that they've had from the ZEV credits, I'm assuming $500 million. So I think that's a
So
pretty
half a
reasonable
billion
estimate.
dollars in Q1 of total credits versus Q4 it was 467 million, right?
Yeah,
So
and
just an
that was all
increase.
ZEV. Yep.
That was all ZEV. And so this one you're saying ZEV plus the IRA. So the IRA, that's very conservative, right? I mean, that's just so
Well,
everyone knows, that seems to be very conservative. That
it,
there's only going
it
to be, it seems like the
I
all
don't think
ZEV
it
with the
is.
increase in deliveries might be 500 million if it's on par with Q4.
Remember that the rules for recognizing the ZEV credits are like really hard to understand, and they're just
Hmm.
lumpy. We don't have a whole lot of visibility. So the
Yeah.
Q4 ZEV credits were much higher than usual. So I think the
Okay.
normal figure has been around 250 million per quarter, maybe 300
Okay.
million per quarter on the ZEV. So if you
Okay.
just assume that stays roughly flat, you're at 300, and then you add another 200 for the IRA credits. To me, that seems like a
Okay.
reasonable middle ground of 500. So I guess I would be surprised if they were as low as 400 million, and I wouldn't necessarily be surprised if they were at 600 million. So maybe there is some more room for upside there, but to me, it doesn't seem wildly out of sorts. But we
Okay.
can let's leave it here for now, and then maybe on the bull case we can up it a little bit.
Okay.
So then stationary storage deployments. This is a new line that I've added here because it's starting to get a little impactful. So last quarter, they deployed 2.5 gigawatt hours. The storage is by far the biggest chunk of the energy revenue. So by my estimates, last quarter, there was 1.1 billion in storage revenue and only about 200 million of solar revenue. So
Hmm.
I'm assuming that's going to continue. Just with the ramp of Lathrop, it's going to have a delay, so it's not necessarily the increase in Lathrop production is what's going to translate to recognition of storage revenue, because there are milestone based payments, and the accounting gets a
Yeah.
little tricky to figure out. But if you assume that there's a modest increase, and not a modest, but a somewhat substantial increase from 2.5 gigawatts to 3.2 gigawatt hours, then I have got the storage revenue increasing about 300 million quarter over quarter from 1.1 billion to 1.4 billion, and then the overall energy revenue increasing from 1.3 to 1.7. So $400 million increase in energy, and that's going to continue to ramp throughout the course of this year, I think.
Mhm.
Um, so putting all this together, you've got 20.7 billion in automotive revenue. You can see that's actually a bit lower than Q4, despite the higher deliveries, and that's due to the lower ASPs.
Yeah.
And then 1.7 in energy revenue, like we said, and then the services revenue just shy of 2 billion. That's been really increasing a lot lately too. Not only do you have the just kind of increased scale of the maintenance and the supercharging and all that, but you also have the used cars coming off lease, which is increasing because you kind of lap these quarters in 2019 and now into 2020 when you're going to have these old Model 3s coming off their first lease that Tesla can then sell and get a profit on. So pretty consistent. I actually didn't notice until just now, but Q4 revenue was 24.3 billion. In Q1, I'm assuming it will be 24.36. So
Yeah.
pretty
So
consistent
almost the
revenue.
same. Yep. Just because the
Um,
main difference is the average selling price of the Model 3 and the Y, right? That's probably the why it's the
yeah,
same, even though there's more units sold, more energy. It's just the price cuts. That is pretty much pure margin we just gave the Tesla gave up. Anyway,
yep,
go on.
yeah, exactly. So speaking of margin, let's talk about that. So
Yeah.
for those who maybe haven't seen these videos before, I look at the margin in a pretty unique way. I think we try to make an estimate on full self driving and credits. Well, credits are disclosed, but if you back out your estimates for those items, then you get what I call a core manufacturing margin, which is just if you look at how much they're selling the hardware for and what is the cost associated with making that hardware, what's the margin. So for Q4, I calculated that to be 21.2%. For Q3, or sorry, for Q1, I'm assuming that drops to 18%. Now that's for the most part just an impact of the price cuts that we spoke about. But it does assume that there's a $1,300 improvement in cost of goods sold quarter over quarter. So over here, I did a little kind of math, so you can see if the average sale price is $52,000, then your reported gross profit is 21.2. So if you
Hmm.
just take that same COGS that's implied from there of 40,000, 41,000 almost, and then you take the 1,300 out of there and you lower the price by 7%, then you can get to an 18% manufacturing margin.
So where'd
So
you
that's
get the
kind of the
1,300 from? Is it just estimated, or what? Where did the
yeah. So
1,300
so
come from?
that's my estimate of how much their cost of goods sold will improve this quarter, just based on like Berlin and Austin being at a higher capacity, Shanghai
Mhm.
too, although it was clearly down for a bit in
Commodities
Q1.
prices coming back down a little bit.
That's a big one. Yep.
Mhm.
So I don't know exactly what it'll be, and we could maybe in a bear case run a sensitivity too, where we assume it will
Yeah.
not be that high. But
Realistically, realistically, your 80% confidence of cost of goods sold decrease could be anywhere from I don't know, I'm just spitballing, like, could be 3,000 to $500 or something. I
yeah,
feel like they at least would have improved by $500, but it could be even 3,000 based on, like, the improvement in automation of Berlin and Austin, for example,
yeah,
being excessive. So it's, that's my spitballing 80% confidence interval. Do you have a stronger
yeah.
or anything? What's
No,
your
I
kind
mean
of
that
80%?
sounds about right to me. I
Mhm.
would be absolutely shocked if there's not some cost of goods sold improvement.
Yeah.
And like you think of it too, like Austin is really increasing output as well, and you've got the
Yeah.
4680s there, and the structural
Yep.
battery pack, and like
Yeah.
the giga castings, like that. Like the cost to manufacture those has got to be a lot lower. So just
Yeah,
as
and they
that
can
increases as a percentage of the
yeah,
pie, that's got to help. Plus the
and that's
fixed
what
cost absorption.
yeah, and that's exactly what Tesla was selling. I remember there was that statement from Vivian, the Tesla China executive. I think it was Vivian something. She was in her statement, which if you translate when they cut prices, was like, we're passing, because they knew they upset a lot of Tesla China buyers that had just bought at the higher price and such. They're just saying, like, this is by design. We have improved our costs so that we can lower our prices. So, and I think Tom Zhu or someone else in the U.S. said some similar statement. So Tesla is telling us directly, like, like they are passing these cost savings down to the customer by price cuts. And so
Yep.
if we are to believe them, the cost of goods services should be decreasing significantly.
Yeah, yeah, they should. And just on top of that, the Zach Kirkhorn gave some commentary that he expects it was an answer to one of the questions on the Q4 call that he thinks the gross margins are going to be above 20%. And I forget what the other figure was, but so you can kind of hone in on this. So then even in our worst case scenario here that we just ran, if there's only $500 of cost of goods sold increase, then you're still at a 20.3% gross margin. So,
Yeah.
the way I read his comments is that's sort of a floor. So to me, the 22% seems about right. 22% reported gross margin once you add back in all these other things.
And last
So that
quarter is
gets
25.9. So going from
Yep.
25.9 to 22% automotive gross margin is what we're
Yep.
speculating on the base case. Okay.
That's right. Yeah, and there was some deferred FSD revenue recognition in there. So you see it in this row 63, for example, there was 642 million. This is an estimate that I have. Tesla doesn't report it necessarily, but 642 million of like FSD and other like acceleration boosts, all those things, versus only 366 million. So in Q1, so you are getting hurt from that. But I would say that the 25.9 was maybe helped a little bit by that kind of artificial increase with the deferred revenue recognition.
Okay.
So anyways, 4.5 billion of total automotive gross margin is what that works out to. Then the energy gross margin, just with greater scale and the fact that you've got these lower priced mega pack contracts, presumably rolling off the backlog and getting replaced with the higher margin one, because Tesla did increase prices pretty consistently over the past 3 years. So some amount of that will fall to the bottom line and help the gross margins. So I'm assuming the overall the energy gross margin increases from 9.4% to 13.4%. And that equates to roughly another $100 million of margin from energy to 262 million overall. And then on the services side, I'm assuming just a modest increase from 5.7% to 6.2% margin, and that's 120 million of extra margin there. So services, I think over time, they've said that they want to get that to 25% or so. I think that's going to be a kind of slow process, especially when they're ramping up these new superchargers and everything so fast. But we'll see. I'm not assuming anything too crazy for now.
Yeah.
So that gets to overall gross profit of 4.9 billion or 20.2%. And just in the interest of time, I can kind of zoom through the rest of this pretty quickly because it's less impactful. So $2 billion in total operating costs. And then that gets to $2.7 billion of net income once you take the interest expense and income and all that other stuff out of the equation. Maybe just one quick note on the interest income. I do think that'll increase a bit because the yields have been increasing and Tesla's been investing a little bit more in kind of short dated maturities. So that may be one area that helps. They had 157 million of interest income last quarter. And I have that increasing to 200 million, but they've got over 20 billion in cash and they're going to invest a decent amount of that into short-term treasuries, which are getting more and more of a yield. So that may be a kind of a dark horse that improves the financials in a non-operating way, but still helps. So that gets to GAAP reported earnings per share of 78 cents. And when you add back the stock-based comp, 91 cents. So I think
last quarter, it was $1.07 GAAP and $1.19 adjusted. All right. Yep. So this quarter, the base case is 78 cents GAAP and 91 cents adjusted. That's the base case estimate. And most of this is so much lower, even though deliveries we're estimating are going to be higher. It's just a lot lower because, and we think that, cost of goods sold will be decreasing, all those good things, but it's really because of the Tesla price cuts. And they needed the Tesla price cuts. Whatever people think and argue, they needed to do those price cuts to sell this amount of cars, or they could have done some traditional advertising, we suspect, but we will never know. So they cut their prices, their margins by a significant amount. And hopefully their cost of goods, went down somewhat proportionally, because that's sort of the message we were fed by Tesla management.
Yep. So just for some context, the street is at 86 cents right now for Q1. So, we're essentially assuming a 5-cent beat or only 6%. So this is not, an overly bullish case, I don't think. But I do think there's a bit of upside from what Wall Street is expecting. So this is our kind of base case scenario. Do you want to run the bull case, Emmett?
Yeah, very quickly. Just put the 440 in and 440 deliveries, and we'll just kind of zoom to the bottom and see what changes. Yeah,
You don't want to do any
maybe
gross margin
maybe
change,
yeah,
or
cost of goods. Maybe make it $2,000 instead of $1,300, or 2,500 instead of 1,300. Yeah,
all right. So then that'd be 20.4% here. So that would certainly be a bull case if they can squeeze that amount out. But so that gets to $1.07 of adjusted EPS, and that'd be a 24% beat. So
wow.
this, if they did that, I mean, everybody would be forced to increase their earnings targets, because I think the full year 23 earnings per
Like
share
390, right?
estimate,
Something like that.
yeah, so something like that. It's definitely below $4. So if they do $1 in Q1, and presumably they'll continue to increase volumes, and margins will improve over the course of the year, unless they have to do further price cuts. But like that would just force everybody to reevaluate and say, oh shoot, like maybe we need to be at 430 or 450 or something like that. And so then
Yeah.
like that would just have a very strong impact if the results were that strong. This is one of the most, I think, impactful quarters that we've seen in a long time, because you're kind of resetting the earnings expectations given the magnitude of the price cuts that they had. So a lot of
Hmm.
the Tesla Q are like, oh, they're going to be breaking even because they don't know how to do math.
Yeah.
So they're
Yeah.
like, oh, you're giving up like a $10,000 price cut means every single ounce of that comes out of gross margin. It's like, well, no, that's no.
Yeah.
So,
Yeah. Yeah.
but there's
If they
a
go over a
fair amount of
dollar, that would be a
uncertainty.
nice. That would be very bullish if it's over a dollar adjusted earnings per share.
Yeah.
Earnings estimate right now is 91 cents. Stu was mentioning. I think that's right. So yeah, over a dollar would be great. Last quarter it was $1.19, but the average average selling price came down so much that it's going to dip into that significantly, even though there's lots of efficiency improvements otherwise.
Yeah. So, anything else with the model, or should we wrap it up there?
I think we'll wrap it up and go to Q&A. I think we have or is there anything else I want to touch on real quick? We want to leave 15 minutes for Q&A if usually we do that. I mean, Twitter and Elon, any updates? I think that we can talk more about it next week or the week after. The blue check marks, I think, are the legacy blue check marks are all going to be dead after, I think, April 15th is the new date or something. So that's going to be epic. I feel like that's going to be really entertaining to see the meltdowns of so many
Yeah.
people for that. And yeah, so also Twitter.
Taleb was actually supporting it, which was nice to see. A lot of times
Yeah.
he'll kind of spar with Elon, but he's like, yeah, this is the only way to do it. So that
Yeah,
was
I
kind
was
of cool to see.
afraid. I know. I was afraid that Taleb has Elon derangement syndrome, like so many people do. But he doesn't. He shows right here. He agrees with Elon on that, so that's good. Some people just disagree and hate on everything Elon does or says, and those people have Elon derangement syndrome. So that's what I'm calling it. And then also there's the reports of Twitter employees getting you know stock incentives valuing Twitter at 20 billion, right? Is that
Yeah.
that seems it's got to be disappointing to the people that participated in going private with Twitter at the 44 billion valuation, right? I mean, if you did so meaningfully, you just kind of you're in it for the long term, right? But in the near
Yeah.
term, that your mark to market is less than half
I
of
don't know.
what it
So
was.
I, I think yes and no. I mean, obviously it hurts to, pay 40 billion for something that's now worth 20. But at the same time, by the time that deal closed, everybody knew it was not worth 44 billion, right? So, I
Not
mean,
yeah, at that time. Yeah, it was
at
probably
that
worth like 5 billion. I thought. If that deal fell
pro-
apart, Twitter would trade down to
seriously,
5 billion valuation or less.
seriously, yeah. So, I mean, I don't know. I mean, what would you have said was a fair price at the time of close for that? I mean, given the state of everything, and frankly the uncertainty around, like, were they even going to make it, given how much
Yeah.
revenue was just falling off a cliff?
Yeah, I mean, that's why I hesitated. Also, Tesla was down so much. I didn't want to sell Tesla at such a low to make money, to find enough liquidity to participate in going private at 44 billion valuation. So if Tesla was like where it is now, and I could have sold some to participate in Twitter more comfortably, then I mean, yeah, 44 billion's somewhat fair. It's not like a steal. I mean, I think anywhere from like 30 to 50 billion is somewhat fair because you're in it for the long term and you know that there's a very high chance it's going to be worth, 5 to 10 times that in 5 years, And so to me, it would have been worth it anywhere in that 30 to 50 billion dollar valuation range. Just, that's just my eyeball shoot from the hip value. I don't have any napkin math even. I'm just like floating numbers in my head that probably mean nothing. So that's just what I would say. So what do you think, Matt?
I don't know. I mean, like I probably would have said maybe like 15 to 25 billion dollars at the time of close would be a fair price, just based on that. My sense is now, though, the fact that he's saying that they're close to break even in Q2, and they've got through like the riskiest part of this whole transition, I think, right now. I mean, like letting go so many people, and the site didn't crash, and they've actually kind of pivoted the business model and are getting people to a significant amount of people, obviously not most users, but a decent amount to pay for the blue check mark. So you've got this recurring revenue stream, and advertisers are coming back to the platform now, it sounds like. So I think most of the crazy, like, there was a huge storm, back in December, like Q4 of last year, because Elon appeared to be pretty political and was like upsetting like everybody. And so a lot of advertisers were like, people were calling for advertisers to boycott Twitter and all that. And I think a lot of that noise has died down. So, I think advertisers are going to return without fearing that they're going to be canceled for supporting like right wing Elon or anything like that. So I
Yeah,
don't know. I
yeah.
think it's just in a much better spot right now, and wouldn't surprise me if 5 years from now it's worth $100 billion, because Elon just seems to have a magic touch with all this stuff.
Yeah, absolutely. So I think I could the whole economy. I'm excited where Twitter is going. I wish I had a piece of it just because I'm excited about where it could go and the possibilities with the soft tech of Twitter. I mean, it's not, you got to, Elon mostly deals with hard tech stuff and he's done incredible things, but hard tech by its nature is much slower to transition, to change, to transform the world or transform industries. Soft tech, software, social media is part of that. Twitter is all soft tech. And so
Yeah.
you do something special there, you could press a button to replicate it a million times and almost instantly change the valuation. Just like FSD, if they figure that out perfectly, press a button, download to all the cars at once. That's the soft tech part of Tesla. So, I mean, I think that there is incredible potential with Twitter, especially with Elon building his own kind of large language model technology, chat GTP like technology within Twitter, apparently, is my guess. And, the bot Twitter is going to be the only trustworthy source. It's already, for me, become the only trustworthy source of information and news, especially with the community notes has been really helpful. I don't know if you follow them, but
Mhm.
it's like, I never trusted for like the last several years media from other places, but I actually am gaining more and more trust in headlines I see on Twitter. I'm still very skeptical. I still have that piece of skepticism in me on everything I read and see that, is new information to me. And I'm always going to keep that, but it's less guarded watching through using Twitter now than it ever has been. And I think
Yeah.
that guard is going to come down more and more. And then, so people are going to trust it more than anything else. And it's just going to be like the main congregation spot to get information and exchange ideas. And then you're going to have this bot economy I think that'll be built out into Twitter. Like the bots, legitimate bots that'll be paying $7 a month that you can hire or you can pay for to do things for you within the Twitter sphere. I think that's going to be a whole new economy people are kind of overlooking right now.
Yeah. I mean, and that's also kind of like the way out of this like terrible fiscal mess that we're in too. I mean, if the economy and just improves so much as a result of the improvements in AI and the bot economy, like you talk about, I mean, that can just like magically solve all these problems that seem like unsolvable right now.
Yeah.
Like it seems like we're like a nation on decline here in the United States. Like, it's like we're experiencing the fall of Rome firsthand, but
Yeah.
if AI really like pans out as promised by the optimists, then it could usher in just like a whole new era of kind of unprecedented and unimaginable like prosperity for everybody. So it's
Yeah.
um, I don't know. I don't know what percentage probability I'd ascribe to that, but it's a realistic outcome that could play out.
Yeah, I mean, it's soft tech, right? It's like, yeah, I feel like for me, I have to change my mindset and how fast things can happen with soft tech versus hard tech. Building chips, batteries, cars. Brain implants is also hard tech. Neuralink or whatever. So that's all hard tech. Meaning, like in the physical world, you have to build and do things in the physical world. Soft tech, software stuff that like we see with GPT. Sorry, I keep saying GT. Chat GPT. We see with that how quickly soft tech can take off and transform everything just in a few months, or. And so you're going to have quick transformations of industries and industries created out of thin air almost overnight from soft tech chat GPT like technology, large language model neural network stuff, so you already see these plugins like crazy with it. And it's just going to it's like Twitter could become the fabric for employing all of that stuff, in my opinion.
Yeah, it could be pretty interesting. Martin in the comments says it seems that Twitter is no different than any other source. You got people on the left, people on the right, and I agree with him on that front. But one thing, like I've yet to see a community notes that I like disagreed with or that seemed very biased to me. I'm sure there will be one of those at some point.
Yes.
But I've been very impressed with how like credible and neutral the community notes have seemed to be. So
Yeah.
if that starts to change, then I would lose a lot of faith in Twitter. But people can say whatever they want to, but the community notes I think is the thing that really increases the trustworthiness of Twitter overall. And that's frankly that has panned out way better than I thought it would.
Yeah, that's been the dark horse of gaining a lot of my trust in Twitter more and more. Um, so let's do some questions. I know we've talked about that for a lot. Anyone has any questions, put it in there. We'll have Alec behind the scenes quickly search for questions and populate a few on here before we go. We're already past our hour here. So let's go on to the first question from Super Jambon 31. How you doing? Long time listener. My question for the live stream is assuming there's 20,000 car beat on deliveries. So 440 instead of 420, let's say, or something like that. So 4.5% beat on average. How many percent did the stock gain for a similar performance in previous years? Past performance does not dictate future returns. So if you're talking like early, years of investing in Tesla, like 2013 to 2017, and there's a 5% beat, sometimes the stock could move, 10 or 20%, because it was so highly shorted, and it would be like a trigger
Yeah.
event for a lot of shorts to cover. It is still highly shorted nominally speaking compared to history, but relatively speaking compared to where the market cap is now, it's not shorted very much like it used to be. There's still a lot of shorts that play in Tesla, I think, but it's not going to move the market as much when those relatively small amount of shorts cover. So for that, and other reasons too, it's just so much more liquid of a name now than it ever has been. It's like the most talked about stock ever now. And so, I think it depends. It's hard to predict. If they beat by 4.5%, it wouldn't surprise me if the stock crashes 5%, or if the stock goes up 10%. That's like my 80% confidence interval, down 5% or up 10%, that next 24 hours. What do you think, Matt?
Yeah, I mean, I agree with you. It doesn't seem like it'll have a very big impact. I mean, I think given the kind of scale that they're at now, like they'd have to post like I don't know 460 or just something nobody's expecting to like really for me to have confidence that the stock would actually move.
Yeah.
And I mean, I obviously don't see that happening. And yeah, so I mean, yeah, if they beat 4.5%, maybe the stock moves 2% or something like that. I think it's just going to be a bit muted. Um,
Yeah.
but I think the bigger question is going to be the margins. The margins are such an unknown right now for Q1 that if they're weak, then that could be horrible news for the stock. If they're a bit stronger than the market's expecting, like we were saying earlier, I think that could really recalibrate things. So at this point, for Q1, anyways, I think the margins are going to be a much bigger deal than the particular delivery number.
Yeah. All right, next question is from Barbecued Veggies on Twitter, another longtime listener. How you doing? Given that full FSD is trained on human interventions, will it ever achieve superhuman abilities? Apart from the fact that it can see from multiple angles, it feels like the handling, decision making, etc., is likely to still be human-like. I think the superhuman abilities will be in the, the cameras all at once everywhere. Like, I think the superhuman abilities won't be like it can like drive faster than a human. It's not going to be like a super car, but it'll be superhuman in terms of attention and in terms of reaction times to things. I think that's clearly in the picture. And in terms of consistency of a good driver, like some of us are very good drivers, when we want to be, but to maintain that consistency over the course of a long drive or every single day without distractions, that's where we all falter. And I think 90%, my guess just is like 90% of accidents could be prevented if humans, were all at their at their most attentiveness all the time while driving without ever letting distractions happen. So that alone is the superhuman ability, I think, in FSD, is just that highest level of attentiveness that we have is the floor of where FSD will be. What do you think, Matt?
Yeah, I completely agree with you, Amit. I mean, I think we all have our bad days, and anything, and driving certainly applies. Like I can just think of this one time, I was on this like on ramp to the highway, and my 4-year-old was in the back, and she's like, "Daddy, I just unbuckled myself," and I'm like, "What?" So like I couldn't pull over. I was about to merge. It's like that's always one of like the most stressful
Yeah.
parts of any drive. And so like I had to like reach back there, once I had merged onto the highway and like buckle her in. And I was just like, this is like not safe. But like I just didn't know what to do. So like even if like the right thing to do was to, like, I don't know, pull over or whatever, I was just so flustered at that moment because I was like not expecting that. And I'm sure my
Yeah.
decision making was slightly impaired in that moment because I was just like, scared and like confused. So I think not having those instances, the reaction times, like you said, because I think like most of the situations are we lose our attention for a minute because you're looking at your phone, or you're like looking at something out on the side of the road or whatever, or
Yeah.
you got like a deer runs out at you and you've got to slam the brakes and you hope you do it fast enough. And I think
Yeah.
computers will be better at
Yeah.
both of those types of situations. That's going to cover the vast majority of accidents. So I agree with
Mhm.
you. The superhuman is not going to be that it's like smoother or like just like 1,000 times better at decision making, but it'll be way more consistent in its decision making, and that's the superhuman part, I think.
Yeah. Next question is from Just for Funds on the YouTube comments.
Is that
Has each of
funsies or funses?
Yeah. Question: has each of your estimated FSD timeline to full autonomy changed over the last month with the version 11 releases? And what's your current um, level 5 timeline estimate? Yeah, I mean, I have not driven the version 11 release yet. I'm waiting for it. I hopefully get it. I see everyone else getting. I'm getting very jealous. So I hope one of my two Teslas gets the version 11 very soon, so I can test it myself. But from the videos I see, it's very impressive. It seems like a very big step forward. It's not perfect yet, of course, but it's a big step forward. And apparently, this is like getting to the single stack, base infrastructure they can build off of much more quickly and iterate faster from here. So if that's true, then my estimates are the same, that I still think level 5 timeline is, probably between, level 5 capability. Now, level 5 wide adoption, I don't think will be till like a year or two after that. But level 5 capability, I think could be, between Q4 and Q2 next year, between Q4 this year and Q2 next year. So between
Oh, really?
nine,
Oh, okay.
nine and 18 months from now is level 5 technology capability, in my opinion. But the adoption of it, the acceptance of it might be a year or two after that, is my thought. But I think a lot of early adopters will start, singing praise about it being like that 9 to 18 months from now. If I test it myself and I verify that it is a step change forward, and if some iterations, new versions come quicker, like we saw version 11.3 just come out like 2 weeks later after version 11.2. So if we keep seeing version 11.4, 11.5 every like 3 or 4 weeks, every 3 or 4 weeks cadence, that's my prediction.
Yeah. So I mean, I would say my baseline is probably more like 2 years from now. Yeah, maybe
For
even
the
three. So
technology.
yeah,
Hmm.
for the technology, maybe 2.5 years. Call it like mid 2025 to get to level 5 capability. Um, but it's like, to the question itself, like nothing about the past month has really changed my timeline. I mean, it's been kind of a slow rollout, just like it always has been for Tesla. But the thing that would change my mind on this is exactly what you said, Emmett. If we start getting back to that 2-week update cadence, which Elon talked about like 2 years ago, and they did
Yeah.
for like a month, and then it was like a month and 5 months and 6 months in between updates. So
Yeah, my understanding was the delay was because they wanted to go to the single stack neural network architecture for the
yeah,
highway and the road driving, and now that seems to be solved, and maybe that delay is not going to happen anymore.
yeah. And he said
That's my
they still
understanding.
have like a few legacy neural nets that they need
Oh, I did see that. Yeah,
to move over, but like, presumably that's, I don't know, less than 5% or so of the neural nets that they need to do this update for. And then I think I asked this question to James Dalma, and he didn't necessarily indicate that like the pace of improvement would increase once you're on version 11. But for the
yeah,
life of me, I can't figure out how it wouldn't. If you're focused on improving the like the software instead of rewriting the software, how would it not improve at a faster rate? So,
yeah,
and on top of that, Dojo presumably will be launching at some point, and so they can switch over from their GPUs to Dojo at some point, and hopefully that will help accelerate things. So, I definitely fully expect the pace of improvement to improve from here. The pace of improvement to increase from here.
yeah. All right, we've gone a long time. Let's do one more question, and then I have a dad joke. All right, boiled down AH. If Twitter becomes, on the YouTube comments, if Twitter becomes cash flow positive and the risk of Elon selling more shares to float Twitter past 2024 that goes away, does Tesla get a boost from that? I don't think so. I think that I think that kind of risk is mostly done with now. I think the market has sort of widely accepted that Elon's not going to sell any shares anytime soon. I don't know. Do you have any thoughts, Matt?
No, I agree with you. To me, this seems like something that we were worried a lot about 3 months ago. That it just doesn't seem like it's a huge risk right now. I mean, there was the like Koguan Leo trying to like support at the 165 level, but then it just like crashed right through there all the way down to like 108, and that was like the peak of fear of who knows when like the stock's just going to drop 5% intraday again because Elon's selling. And we're very clearly past that part. I think people believe what Elon said, that he's not going to sell again until 2025 at the earliest. And then on top of that, like if it becomes clear that Twitter is cash flow positive and can kind of make its debt payments and all that without needing to Elon to backstop it any further, then like that risk is just gone. So it's not necessarily a catalyst. It's more just the elimination of one kind of downside risk, I think. So yeah, this is not a huge factor to me.
Yeah. All right. Well, I got two jokes. One's from Adam Clark in the YouTube comments at the start of today's chat. He had a good joke I wanted to share. He said, "What do you get when dinosaurs crash their cars?"
I did see this one. It was Tyrannosaurus Rex, I think,
Yeah.
WRECKS.
Yeah, Tyrannosaurus Rex. That's a good dad joke to tell your kids, right? Yeah. All right, here's another joke. This is the joke I came up with though, because we haven't done it in a while. Is why don't robots have brothers? I think I asked you that, but you didn't
You did. So
but you didn't know yet.
I
Why don't robots have brothers? What do you think?
the only thing I could come up with is some sort of play on like brobot, but I don't know how to make that work. So
You're
I guess I've
close.
got nothing.
Anyone in the comments have any ideas? Why don't robots have brothers? You can't Google it. That's cheating. I asked this joke of Bing. Bing gave it to me actually. I asked Bing a few. I was like, "What's a dad joke?" And I was like, "What's a dad joke of current events?" He's like, "I can't talk about current events." Bing said or something. I don't know, but would you like a dad joke anyway? And I was like, "Sure." And it gave me a dumb one. And I was like, "Well, what's a good joke with robots or AI and a dad joke?" And it gave me this one. Martin says because they don't have mothers. That's interesting. Jay Lazard is pretty close. Pretty close. Why don't robots have brothers? Because they all have transistors. Trans sisters.
That's a pretty good one, actually.
Yeah, I thought that was interesting. Yeah. I don't know. Maybe I'll tell I wonder if I should tell my kids that one or not. Then I have to explain it to them. I don't know. Maybe it's political. I don't know. Then I go down a big rabbit hole with them. All right. Well, let's leave it there. And we will be on here next week, same time, same place on both Twitter Spaces and YouTube. We'll have the jobless. I mean, not well, jobless numbers later this week, but we'll have the we should have the delivery number for the quarter,
Yeah,
and we
that
can
should come out on Sunday morning, I
yeah.
think. So
I'm at 440. Matt, you're close to that or something like that, right?
yeah, I think I'd probably put my if I had to say a number today, I'd probably say 432.5. That'll be my final number.
432.5. Okay, I'm at 440. And so we'll see. Yeah, we'll see next week, and then we'll plug that number. We'll have you plug that number into your model, and I'm going to say what the earnings per share is. If it's like 450 or 420 or if it's like something outlandish, we'll plug it and give people an update on our estimated earnings per share. I guess something
Yeah.
like that.
I mean, if it's just off like 5,000, it'll move a penny or two. So not
Yeah.
probably not worth revisiting. But yeah,
You.
if it's a big variance, the thing to keep in mind, I think too, is like I think the production number that Troy had is like if you adjust for Berlin, it was like 460 or 470, something crazy like that. But
Yeah.
it's just assuming the deliveries are a lot lower. But if the deliveries are anything close to the production, it could just be monster. So I think that's unlikely.
Yeah.
Troy obviously tracks that stuff a lot more closely than we do. So I'm prone to just kind of defer to his view. But it seems like things are in the works for a potential beat here.
Yeah. I mean, I think what people underappreciate, what I think is underappreciated, is the last two quarters. The production number wasn't it like 30,000 higher, 20,000 higher in Q3, and like 50,000 or 60,000 higher in Q4, something like so. In the last two quarters, wasn't there like 70,000 more Teslas produced than delivered or something like that? I think so.
So I've got Q4. It was 34,000 more,
Mhm.
almost 35,000 more. And then in Q3, it was uh, about 23,000 more, 22,000 more.
Okay.
So you
So
got a
55,000, 60,000. Plus there's always been a backlog or something in transit of like 20 to 30,000 anyway. So you have like between this, I don't know what it historically has been on average or what it was in, calculated to be in transit going into Q3, but if you add those numbers up, there's quite a lot of cars that have been in transit between Q4 and Q1 that will have been delivered for sure. And then it's just a matter of historically what's the proper average that's going to be going forward for cars in transit between, cars built versus delivered. And so that's what I think is the dark horse maybe, and why it could be a bigger surprise on the upside. So we'll see.
Yeah, I agree with you. I mean, they've never had that level of inventory that they could, kind of flex. Like if they do decide to do some sort of more aggressive end of quarter push, which it seems like there's at least a light end of quarter push going on,
Yeah,
then that
with
that could
incentives.
that could help. And yeah, the in
Yeah.
the U.S. those incentives certainly help because those expire on Friday, I think.
Yeah.
So we'll see.
Yeah. I was trying to do the math. 10,000 miles of free supercharging, that's equivalent to like maybe $2,500 off or something like that, I
That
think,
doesn't
right?
sound right. I don't think that's
Well,
right.
the way I thought of it is like every 200 miles I charged on my Model S, I think it was charged like 10 or $15 of fees by the supercharger. So
Is
if
that
I
right?
times two, yeah, so $200 goes into 10,000, 200 miles goes into 10,000, 50 times, 50 times $10. Oh, maybe $5,000. Sorry. Yeah. So $5,000
That seems way too high to me.
of a deal. Yeah. So it seems like it was about $10 for charging 200 miles of range on my Model S at one of the last road trips I did. I thought at the supercharger, if I recall. I
$10 for
have to look at
200
that again
mile.
because the
Yeah,
Model
that
S is
sounds
not
like
as it's not as efficient as the Model 3 or Y in terms of energy usage, right? The Model S and X.
yeah. What is it like 4 kilowatt hours per mile or something like that, or
Yeah,
miles per
yeah,
kilowatt hour? I think it's for like 4 miles
yeah,
per kilowatt hour, something like
yeah.
that.
And then you have to remember every state is different at the rate that they charge you. I think at the superchargers and stuff, right? It's not all the same uniformly across the United States. I think it's different, right? So maybe we'll see. Well, we can calculate that, but it's somewhere in that like $1,000 to $5,000 range, something like that. The discount they're giving two to five
Yeah,
thousand dollars. It seems to me.
but yeah, keep in mind that doesn't go. It's not like a one time earnings hit, so that would go into like a deferred revenue account, and it
That's
would
true.
they'd essentially have the cost of goods sold hit for the supercharging part of that
Yeah,
offset
that's a good point.
when it's used, and the deferred revenue amount would just be recognized. So it might lower the kind of reported ASP a bit because you can't recognize all of the revenue, but it's not like the gross margins would take a hit right off the bat.
Very good point. Yeah.
Accounting nerd for the win.
Yeah. Yeah. All right, guys. We've gone on a long time. So we'll see you next week. All right.
Thanks.